In March 2022, the Rolex secondary market hit $17,206 on average across all models. 2 years earlier, that same average sat around $8,000. In less than 24 months, Rolex pre-owned prices more than doubled. Steel Daytonas that retailed for $15,000 were flipping for $53,000. Submariners jumped from $9,000 retail to $25,000 on the gray market. Even entry-level Oyster Perpetuals, watches that cost $5,000 new, peaked at $12,000 used. Buying a Rolex became a get-rich-quick scheme. People buy at retail and sell it the next day to make thousands of dollars in profit. It was basically free money. And no, this wasn't normal market appreciation. It was a bubble, and a speculative frenzy fueled by factors we'll mention in this video. And just as it rose, that frenzy crashed hard. By December 2022, average prices had crashed to $11,785. What happened? How did those crazy prices just disappear? Today, we're breaking down exactly what happened. We will show you the 7 forces that inflated the 2022 Rolex bubble, the moment it peaked, and the brutal 3-year correction that followed. By the end, you'll understand why this wasn't just a market fluctuation, but the collapse of a collective delusion. You'll also see the victims of this crazy event in Rolex history. Let's get into it, beginning with number 7. Number 7, the pandemic supply shock. When production stopped. In March 2020, when Switzerland went into lockdown, Rolex closed its manufacturing facilities, and overnight, the supply of new watches froze. For years, Rolex had maintained a delicate balance. Produce roughly 1 million watches, or about 1.24 million annually. They intentionally keep supply of the watches slightly below demand. The intention is to create wait lists that reinforce exclusivity. It was calculated scarcity, and it worked beautifully. Who didn't want a Rolex? Rolex is a pretty smart brand, and they built up a situation where people who have made significant achievements in their life feel incomplete without owning a Rolex. The watch was a conversation starter and a storyteller. For owners, it's usually like, "Did you know the story of how I got this watch?" Or, "Do you know why I got this watch?" Some of the biggest stars you know use Rolex, and so this created this intense feeling of fear of missing out. People just wanted to get Rolex to show that they belong among the elites who had made significant achievements. Rolex fueled that fear with its strategies and its calculated scarcity, but COVID-19 shattered that calculation. When Swiss factories stopped working because of the lockdown protocols, Rolex production dropped an estimated 30%. That's 300,000 fewer watches hitting authorized dealers. Global logistics fell apart. Shipping delays stretched for months. Components couldn't cross borders. It was pretty crazy for a watchmaker that was already not making many watches. Well, at least relatively. Even after factories reopened, production remained disturbed throughout 2020 and into 2021. The impact was immediate. Authorized dealers, already operating with limited inventory, saw their display cases empty completely. Steel sports models, the Submariner, GMT Master, Daytona, vanished. Waitlists that had been 1 to 2 years exploded to 5, 8, even 10 years. Some dealers stopped taking names entirely. There was no point. Supply had become impossible, but people still needed watches, and so desperate buyers turned to the secondary market. Pre-owned platforms like Chrono24 and Bob's Watches saw traffic surge. Gray market dealers, those selling brand new unworn Rolexes outside official channels, suddenly held all the power. They had inventory. Authorized dealers didn't. And when supply dries up while demand stays constant, prices do only one thing: they explode. A Submariner date that retailed for $9,150 started trading for $12,000, then $14,000, then $16,000. Each sale set a new benchmark. Each benchmark emboldened sellers to push higher. The supply shock created the foundation for what came next. But the pandemic didn't just cut supply. It did something even more dangerous, at least for the Rolls market. It gave people money, lots of it. The supply shock choked inventory and sent prices climbing, but that alone wouldn't have created a bubble. The real accelerant came next. Because while Rolex production froze, governments around the world opened the floodgates. And when trillions of dollars hit the market with nowhere to go, luxury watches became the target. This brings us to this next part. Number 6. The stimulus tsunami. When everyone had money to burn. Because of the menace and the economic situation COVID-19 caused, governments all over the world had to take drastic approaches to revive their economy. Businesses and people needed money, and between 2020 and 2021, their governments decided to give them. Governments globally pumped roughly $5 trillion into economies through stimulus programs. Checks arrived in mailboxes. Unemployment benefits expanded. Businesses received forgivable loans. Central banks slashed interest rates to near zero. The goal was preventing economic collapse. The side effect? A spending binge unlike anything in modern history. People stuck at home couldn't travel, couldn't dine out, couldn't spend on experiences. Some people began to save the money with them, and lockdown savings ballooned. Americans alone saved an estimated $2.3 trillion more than normal during 2020. After saving so much, they began to spend it on things: luxury goods, electronics, and collectibles. But that's not all. Some people decided to fulfill one of their deepest fantasies. They decided to get a Rolex, and it wasn't just people who hadn't gotten them before that were caught up in this frenzy. High net worth individuals, already insulated from economic pain, shifted capital into tangible assets. Stocks felt volatile. Bonds paid nothing. Real estate required effort. But a Rolex? It felt right. It was portable, and if the story behind it was impressive enough, it would appreciate in value. And so, just like that, the psychology shifted. Watches stopped being luxury purchases and became alternative investments. Forums exploded with threads about best ROI models. YouTube channels dissected which references would appreciate fastest. Internet chat forums with large memberships became a marketplace for speculation disguised as collecting. Apart from the stimulus checks, the borrowing was cheap. Near zero interest rates made financing effortless. Why save for a Submariner when you could finance it at 2% and flip it for a 30% gain? The math was irresistible, rational even. Demand from the US and Asia surged 50 to 100% year over year. Rolex exports hit record highs despite production constraints. Every watch that reached a dealer got snatched instantly. And 70% of transactions shifted to secondary channels because authorized dealers had nothing to sell. The stimulus tsunami created buyers with cash and confidence, and it had the extra ingredient to turn into a full-blown mania. It had believers who were convinced that Rolex was more than a watch. It was digital gold. Stimulus money flooded the market, but that cash needed somewhere to flow, and it found it. But that was just the beginning, because around that time too, this next part also happened. Number 5. The crypto boom, when Bitcoin minted watch buyers. In 2020, Bitcoin sat around $10,000, and by November 2021, it peaked at $69,000, a nearly 700% gain in under 2 years. Ethereum went from $200 to $4,800. Altcoins like Dogecoin and Shiba Inu turned joke investments into fortunes. NFTs sold for millions. The crypto bull run minted overnight millionaires by the thousands. And they all wanted to flex visibly. They needed something to show their crypto gains. Crypto gains felt unreal. But a Rolex on your wrist? That was real. Status you could touch, wear, photograph, and post. Instagram became a parade of crypto winners, flaunting steel Daytonas with captions about believing in the vision. TikTok exploded with crypto bro aesthetics, where Rolex was the mandatory uniform. But crypto wealth didn't just fuel buying, it changed the mentality. Crypto investors were conditioned to volatility. They'd seen Bitcoin crash 50% and recover within months. They treated every dip as a buying opportunity. They believed in infinite upside, and when they looked at Rolex, they saw the same pattern. Prices are going up, scarcity driving demand, a community convinced values could only climb. Rolex became digital gold 2.0. liquid like crypto but tangible like real estate. You could wear it, sell it within hours on Chrono 24, and reinvest profits into the next hyped model. Platforms reported transaction volumes tripling between 2020 and 2022. Speculative buying accounted for an estimated 25 to 30% of secondary market volume at peak. Experts warned it was unsustainable. Traditional collectors shook their heads, but the crypto crowd? They didn't care about the ethics of owning and dealing in Rolex. They'd been right about Bitcoin. Why wouldn't they be right about Rolex? Crypto didn't just fuel the bubble, it provided the template. Endless hype, FOMO-driven buying, and the belief that prices only go up until they don't. In May 2022, Bitcoin crashed, Ethereum collapsed, the Terra and Luna implosion wiped out $40 billion in a week, and suddenly, crypto winners became crypto casualties, forced to liquidate assets, including watches, and their actions contributed to the incredible plummeting of value of Rolex in the secondary market. Crypto money supercharged demand, but it needed amplification. It needed a megaphone, and that's exactly what social media provided. Because when Instagram turned Rolex into an identity and TikTok made flipping look like genius, the bubble went from big to unstoppable. Number 4. The social media hype machine. When Rolex became a meme. During this peak period, Instagram posts tagged #Rolex increased 300%. TikTok videos about watches went viral daily. YouTube channels dedicated to watch investing exploded in subscribers. Forums like WatchaSeek and Reddit became battlegrounds for waitlist strategies and flip tactics. Rolex stopped being a collector's hobby. It became a cultural phenomenon, and this wasn't the good culture. Influencers and celebrities weaponized Rolex as status signaling. Rappers name-dropped Daytonas in lyrics. Athletes posted wrist shots after championship wins. Crypto influencers flexed GMT masters as proof of success. And everyday people absorbed the message. If you want to look successful, you need a Rolex. The popularity of the hype was the key. Historically, Rolex appealed to a specific demographic. Older, wealthier, traditional. But social media brought Gen Z and millennials into the fold. Suddenly, 25-year-olds were obsessing over steel sports models. They viewed Rolex not as a watch, but as an investment, a flex, and a personality trait all at once. But the hype wasn't just organic. It was algorithmic. Platforms like TikTok and Instagram rewarded watch content with reach. Videos showing unboxings, flips, and profits racked up millions of views. The algorithm learned that watch content drove engagement, so it pushed more watch content, which created more buyers, which drove more content. A feedback loop. Internet forums amplified the frenzy. They shared waitlist hacks with their members. Stories went viral about people charming sales associates or buying jewelry to build purchase history. The message was clear. If you're smart and persistent enough, you can score a Rolex and flip it for profit. Gray market dealers became celebrities. Private Instagram accounts with exclusive inventory. WhatsApp groups with insider access. Voice notes promising, "I can get you something crazy." The mystique around securing a Rolex intensified the desire, and the numbers backed the hype. A 2021 study showed luxury watches appreciated 89% over the previous decade. Rolex dominated. The narrative solidified. Rolex always goes up. It's a safer bet than stocks. It's wearable wealth. By early 2022, the hype reached critical mass. Rolex wasn't just trending, it was everywhere, and this convinced even skeptical buyers to jump in. After all, if everyone's doing it, how could it be wrong? The social media hype machine didn't create the bubble alone, but it broadcast it globally, and it convinced millions that buying Rolex wasn't speculation. It was smart money. Social media turned Rolex into a viral phenomenon, but hype alone doesn't move prices. You need boots on the ground, buyers willing to camp at dealers, sweet-talk sales associates, and flip watches within hours. You need flippers. And at peak, they controlled nearly 30% of the market. Number 3. The flipper army. When resellers became the market. Flippers were the engine of the 2022 bubble, not the only cause, but the most visible, the most hated, and ultimately, the most devastating when they exited. Who were they? They were opportunistic resellers, crypto traders looking for side hustles, influencers leveraging followings, even authorized dealer insiders playing both sides. They bought Rolexes at retail, held them for days or even hours, then sold them on secondary platforms for double or triple the price. The math was crazy. Buy a Daytona at retail for $15,000. Listed on Chrono24 for $40,000 and profit $25,000. In some cases, flips happened so fast the plastic wrap stayed on. Brand new, unworn, instant profit. At peak, flippers accounted for 20 to 30% of secondary market transactions. Morgan Stanley described it as a cottage industry. Bob's Watches reported inventory turnover accelerating dramatically as flippers cycled watches through the system. But flippers didn't just profit from the bubble. They created artificial scarcity that inflated it further. Here's how it worked. Flippers built relationships with multiple authorized dealers. They posed as loyal customers, buying jewelry, leather goods, and less desirable watches to establish purchase history. Some used fake names and shell companies to circumvent dealer limits. Others bribed sales associates or leveraged personal connections. Once they secured allocations, they hoarded them. That Submariner that might have gone to a genuine collector? Flippers grabbed it first. They starved the primary market, funneling inventory into secondary channels where they controlled pricing. Authorized dealer cases stayed empty. Wait lists stretched to absurd lengths. And desperate buyers had no choice but to pay gray market premiums. The scale was staggering. Reports surfaced of individuals buying 7 Speedmasters under different aliases. Others accumulated dozens of Submariners and Daytonas across multiple dealers. One flipper bragged online about netting over $300,000 in a single year flipping watches part-time. Rolex CEO Jean-Frédéric Dufour publicly condemned flipping, calling it detrimental to the brand's equity. The company instructed authorized dealers to track buyers, blacklist repeat flippers, and require signed agreements promising not to resell within certain timeframes. But enforcement was inconsistent. Some dealers cracked down. Others looked the other way, especially when flippers were spending tens of thousands on ancillary products. The incentive structure was broken. Sales associates earned commissions on jewelry and accessories, not on steel sports models. So they had financial motivation to string customers along, encouraging endless spending while dangling the possibility of a Daytona allocation. And speaking of Daytona, the specific model impacts were brutal. Let's start with Daytona. On retail, it was $14,550, and during peak secondary market, it cost $53,911. That was a 270% premium. Flippers could net $20,000 plus in under 24 hours. Moving on to the Submariner date. It retailed for $9,150, and in the secondary market, it went for $22,000 to $25,000, a 140 to 170% premium. See why people decided to be flippers? This insane peak also affected GMT Master 2 Pepsi, the entry-level luxury starter watch. It normally sold for $10,700, but during the peak secondary market, people were buying it for as much as $25,000 plus. That's a 130% premium. The Oyster Perpetual wasn't left out. It sold for $5,900. At peak, $12,031. This was over 100% premium for an entry-level watch. Flippers detached prices from fundamentals. A basic Datejust hit 50% premiums. Models with no historical significance commanded absurd valuations based purely on hype and scarcity. Then the market turned, and flippers became the first casualties. You'll see what we mean soon. Flippers created artificial scarcity and profited wildly, but they needed one final ingredient to push the bubble to its absolute peak. They needed everyone else to believe. Not just that Rolex was valuable, but that it would stay valuable forever. That belief, that collective delusion, is what turned a hot market into a speculative mania. Number 2. The Rolex always goes up narrative, when belief became delusion. By late 2021 and early 2022, a dangerous narrative had solidified across watch forums, dealer showrooms, and social media. They all said Rolex always goes up. Even if experts disagreed, it seemed like evidence did point to Rolex always going up. Prices had risen consistently for years. Bob's Watch's data showed average Rolex values appreciated 550% from 2010 to 2022. The 2021 Knight Frank Luxury Investment Index reported watches up 89% over the prior decade, with Rolex leading the category. Every dip in the market quickly recovered. Every new retail price hike from Rolex seemed to lift secondary values. Collectors who'd bought years earlier were sitting on massive paper gains. And newcomers watched friends flip watches for profit and thought, why not me? The narrative became self-fulfilling. As long as people believed Rolex would appreciate, they kept buying, which pushed prices higher, which reinforced the belief, which attracted more buyers. A classic bubble psychology. Rolex was compared to real estate, to gold and blue-chip stocks. People genuinely believed they were parking money in a safe haven asset that would protect them from inflation and generate returns. Financial advisors, watch dealers, and online gurus all echoed the same message. Rolex is a store of value, but the narrative ignored history. Rolex prices haven't always gone up. The quartz crisis of the 1970s and 80s nearly destroyed Swiss watchmaking. Prices collapsed, brands went bankrupt, and even Rolex struggled. The 2008 financial crisis saw luxury watch values plummet as collectors liquidated to cover losses elsewhere. The idea that Rolex is immune to market forces is fantasy, but during the bubble, skeptics were shouted down. Anyone questioning valuations was dismissed as jealous, uninformed, or simply not getting it. The peak of the delusion came in early 2022. Articles were written about Rolex as an inflation hedge. YouTube videos analyzed which models appreciate fastest. Fractional ownership platforms emerged, allowing people to buy shares of individual watches like stocks. The belief had metastasized into groupthink, and groupthink doesn't tolerate dissent. Then March 2022 arrived, and if you thought things were crazy before then, you'll have no exact words to describe what happened in the month and period. That period was the exact peak, but not long after, the cracks started showing. Dealers whispered about slower sales. Inventory sat longer than usual. Premiums stopped climbing. The momentum that had carried the market for 2 years stalled. The narrative fractured, and once belief wavered, the collapse was inevitable. The belief that Rolex always goes up kept the bubble inflated, but belief alone can't defy economics forever, and then came this next reason. Number 1. The economic reckoning, when reality crushed the dream. In spring 2022, the perfect storm arrived. The Federal Reserve, spooked by inflation hitting 9.1% in June 2022, began aggressively raising interest rates, from near zero to over 5% in less than 18 months, the fastest rate hike cycle in decades. Higher rates killed the cheap money that fueled the bubble. Borrowing became expensive. Financing a $30,000 watch at 7% interest suddenly looked insane. Speculative buyers vanished. Simultaneously, crypto crashed. Bitcoin fell from 69,000 to under 20,000 by November 2022. Ethereum dropped 70%. NFTs became worthless. Crypto millionaires became crypto casualties. The wealth effect reversed. People who'd felt rich in 2021 felt broke in 2022, and luxury spending, especially discretionary purchases like watches, evaporated. Stock markets wobbled. Tech stocks, which had minted a generation of newly wealthy buyers, cratered. The Nasdaq fell 33%. Paper wealth disappeared. Geopolitical chaos added to the uncertainty. Russia's invasion of Ukraine disrupted global markets. Energy prices spiked. Supply chains, already strained, broke further. Consumer confidence collapsed and inflation eroded purchasing power. Middle-class buyers who'd stretched to afford a $10,000 Submariner in 2021 couldn't justify it in 2022 when groceries, gas, and housing costs were skyrocketing. Luxury watch sales across the industry tumbled. Swatch Group reported sales down 14.3% in H1 2024. Richemont fell 13%. Even Rolex, with its unmatched brand strength, couldn't escape the broader downturn. The secondary market bled first. Prices that peaked in March 2022 at $17,206 then began falling. It started slowly at first, then faster. The long decline, 9 quarters of pain. 2023 and 2024 became a war of attrition. 9 consecutive quarters of declining prices, each quarter chipping away 2 to 5%. No dramatic crashes, just relentless erosion. In Q1 2023, prices went down 4.5%. This was the initial unwinding. Flippers were dumping inventory and buyers disappeared. Things were just getting real. In Q2 2023, prices went down 3.2% more. Authorized dealer waitlists shortened and gray market supply surged. Then Q3 2023 came, and prices continued to plummet faster than Rolex owners could strap their watches on the wrist. It went down 5.1%. Then Rolex decided to hit the final nail on the coffin of the secondary market. In Q4 2023, prices went down 4%. Then Rolex raised retail prices 5%, compressing secondary premiums further. 2024 followed the same pattern. Q1 down 3.8%, Q2 down 2.1%, Q3 down 1.5%, Q4 down 2.2%. The cumulative impact of these falls is that prices fell 30 to 40% from 2022 peaks. The watch chart's overall market index dropped 37%. Rolex-specific indices fell 31%. Steel sports models, the most hyped during the bubble, saw the steepest declines. Daytona went from $53,911 to $27,642 by January 2023. It went down by a whopping 49%. It later recovered to $37,995 by 2025, but the damage to the secondary market was done already. Still on the decline, Submariner date went from $22,000 to $25,000 to $13,500. It went down 40%. Then there's the GMT Master 2 Pepsi. From $25,000 to $16,000, it went down 36%. The sleek Oyster Perpetual was $12,031 in the peak period, but it has fallen to $6,358 by late 2022. While it went by 47% at first, it later stabilized around $9,145. Even gold and less speculative models fell 15 to 25%. As premiums eroded in late 2022, flippers who'd borrowed money to buy inventory found themselves trapped. Margins vanished, holding costs mounted, and they had loans to repay. Panic selling began. Flippers dumped inventory at whatever price they could get. Each sale pushed the market lower, which forced more flippers to sell. A liquidation spiral. Secondary dealers reported buyback volumes increasing 40% in Q3 and Q4 of 2023 as distressed flippers desperately offloaded watches. The flipper exodus cleared the market of speculation. Waitlists shortened dramatically. The Submariner waitlist dropped from 105 weeks in 2022 to 60 weeks by 2024. Authorized dealers started having stock. Real collectors could finally buy without gaming the system. Flippers didn't cause the bubble alone, but they accelerated it on the way up and triggered the crash on the way down. They were the gasoline on a fire that was already burning, and now the market had fundamentally reset. The aftermath. Where we stand today. By late 2024 and into 2025, the bleeding slowed. Prices stabilized around $13,426 on average, still well below the 2022 peak, but above pre-pandemic levels. 53% of models now trade above retail, down from over 80% in 2022. Premiums compressed from 50 to 150% to just 10 to 20% for most references. The correction weeded out speculation. Flippers, burned by losses, largely exited. Today, they represent less than 10% of transactions, down from 30% at peak. Authorized dealer waitlists normalized. The Submariner waitlist dropped from 105 weeks to 60 weeks. Real collectors returned. These sets of buyers are motivated by passion, not profit. They hunt for the stories behind the watch. However, the market has become smaller and less frenzied, but even though it is, the reduction in the intensity has made the market become healthier. Experts call it a stabilization, not a crash. Prices remain 20 to 30% above pre-2020 levels. Rolex's brand prestige survived, but the narrative changed. Rolex is no longer viewed as a guaranteed investment. The fantasy of endless appreciation died. Buyers today understand that watches are luxury goods, not financial assets. They'll hold value better than most things, but they won't make you rich. The 2025 market is buyer-friendly. 47% of models trade at or near retail. Dealers negotiate. Inventory is available. And the days of paying double retail for a steel Submariner are gone. Looking ahead, modest gains are expected. 2 to 5% annually if tariffs stabilize and the economy holds. Most likely the 2022 craziness would never happen again. The bubble taught a brutal lesson. Nothing goes up forever. Not stocks, not crypto, and definitely not watches. The 2022 Rolex bubble was a perfect storm. Pandemic supply shocks, stimulus money, crypto windfalls, social media hype, flipper armies, a collective belief that Rolex was a safe haven, and an economic reckoning that crushed it all. Prices doubled, then crashed. Fortunes were made and lost, and the market that emerged is fundamentally different from the one that existed in 2021. If you bought at peak, you're probably still underwater. If you held off, you're in a much better position today. And if you're thinking about buying now, 2025 offers opportunities that didn't exist 3 years ago. The lesson? Hype is not a strategy. Scarcity is not value. And just because everyone believes something doesn't make it true. So what do you think? Did you buy during the bubble? Did you flip watches and make money? Or did you watch from the sidelines and feel vindicated? Drop your stories in the comments. We want to hear them, and if this video helped you understand what really happened, hit that like button and subscribe, because the luxury market is full of bubbles waiting to burst, and we're here to break them all down. Some markets recover, some don't. As for Rolex, the brand will endure. But the days of treating it like Bitcoin are over, and you'll be a victim of the bubble. We won't let you.